Weekend all. Ira Epstein, and here we are with your financial market wrap-up, and this is for the Labor Day weekend. It is August 30th, 2024. Have yourself a great weekend. Remember, stock markets are closed on Monday. A lot of cash markets that trade bonds and so on are closed. Futures will have abbreviated trading sessions between Sunday and Monday, so be sure you check on that. I sent out to everybody what they are. I'll probably send it out again over the weekend just so that they have it one more time. What a wild session it was today. I mean, if you got up from your chair and you walked away and you came back an hour later, it was a different world. You were just whipping back and forth. You ended up closing sharply higher, 51 points in the S&P. The Dow up 200. You were up nearly 230 points in the NASDAQ and up 12 in the Russell. Any way you want to cut it, it's strong. Look at how hard you broke gold and silver. Do you think a lot of this had to do with the thinness of the situation as traders saw the PCE numbers this morning? I do. I think they saw those numbers, they traded, and I think the volume just instantly fell apart. And I think that's what moved a lot of these markets, that you were able, with fewer size orders, in my opinion at least, to move the markets pretty good. You fell hard in the energy markets because we're hearing that OPEC wants to continue with the idea that they're going to bring on more production in October. Now, you've got to be careful of the semantics of the word more production. Please listen. You've already had promises that starting by then, October, Russia, Iraq are going to cut back on production as promised because they've been overproducing. Number two, Libyan oil is shut down from the market. So with all that's going on in Libya, none of that, about 200,000 barrels a day, and losing some of the other, well, you can say you're bringing on production when there's voluntary pullbacks by two of the other countries. So I don't know what the net number will be, but on the face of it, it looked a bit bearish. Be sure you swing over now to the December bonds and notes. I apologize for the coughing, but it's going to continue until it stops. It's the COVID and allergies. Now, it is Labor Day weekend. We're having our sale, and I'll get to the charts in a minute with you. 3 months of the complete futures. This includes the morning subscriber video, my twice daily written updates, special reports, special updates, buy here, sell there. Instead of $180 for 3 months, $99. You can get the combo package of the Spider ETF and the futures video, 3 months, $49. Come on, this is $16 a month. You can get the 3 months of the morning only. Give it a try. And you can try 3 months of the Spider only. We took the prices down enough. We've never done a quarterly sale, by the way, ever. So this is the first time that we're ever doing one. May never do it again. We're waiting to see how you respond to it. But it seems to me that if you really wanted to see if I'm good, bad, indifferent, or you want to come back, this is a way to do it. This is only available to new and returning subscribers, not to existing subscribers. Got that? So that's where we're at this point in time. By the way, how do you get it? Go to iraepstein.com. There will also be an icon during the video up here. And when you go to iraepstein.com, look in the top left. You'll see Labor Day sale. Take advantage. It's going to shut off quickly on you. All right. So let's go back now and see what else we have. As we take a look, come Tuesday morning, you're going to get S&P Global. They're going to release their final August manufacturing sector PMI. Construction spending for July will come out at 9 o'clock. And ISM will release their August manufacturing sector index numbers at 9 as well. It's Tuesday where it gets more interesting, Wednesday and Thursday. It's between the JOLTS number, ADP, Challenger Gray, and then the U.S. jobs report. The market is looking for either a 25 or 50 basis point cut at the September FOMC meeting. It's baked in. The only thing not known is the size, and maybe those reports will give it. The PCE today was a dream report. You saw the consumer still spending, Income's still pretty good, and inflation numbers still falling on the core PCE index. That is what the Fed wants to see. All right, let's go over to the chart action now, as I said. When you look at the S&P, all you can say is an all-time high close on a weekly basis, on a monthly basis, because it's both of those today, and where the market's at 56.61. When you take a look at where it's been, this is still a double top area on a closing basis. 56.64 was the all-time high close. So this is weekly, not monthly. Remember what the other chart was. This is a monthly close. Now you're on a weekly. So the weekly's right back where you were. When you come to how the chart looks, you can see you're back up into this resistance area. The pattern is one of lower highs, lower lows. It could get jilted and thrown right on out by hitting now the past high right here, as you can see, a 56.65.50 would do that job. The market is over the 18-week moving average of close, which is over the 100 and the 200. So where's the resistance? It's right here at 57.49, the upper Bollinger Band, if the market can keep itself running. Momentum-wise, you are overbought on a weekly basis. So I don't see new money deploying themselves aggressively into a Bollinger Band. Can it happen? Of course it can happen. But is it the wisest thing? I wouldn't think so. It's one thing to be long already and the market gets up there, and that's what we'll see. I can tell you my morning subscriber videos are long already. When you take a look at the Dow, if they follow the recommendations, obviously, you've got a higher high, lower low. Not the same pattern at all, but again, overbought. When we come to the NASDAQ, you're in a downtrend. Even if you got a hard rally by getting over right here, this high, the 20,736 is pretty stiff resistance. The S&P is the strongest looking of the group at this point in time. And the Russell joins with the Dow. It's just back and forth here. Not that impressive on the chart at all. When you come to the 5-year notes, you've got higher lows, higher highs. Now, I would not be surprised if the market just breaks between now and the FOMC meeting, maybe even now and Friday. It's acting like it wants to slip back. I expect to see solid support right here at the 100 to the 18-week moving average of closes. The same thing in the 10-year, same type of play. You're overbought in both markets is one of the reasons that I'm saying that. When we look at the dollar index, couldn't quite get to the 200-day average, and it had 1 week under the Bollinger Band and closed back within it. I expect that on rallies, it's still going to see selling pressure, especially if it embeds. Now, it needs more time to embed. At the close of the week, both numbers were underneath 20. They were underneath 20 last week, and what about the week before? You're fully embedded. So two things come out of this now. If the red line closes over 21, then my work says you might make a run up here to 104, even right in that general zone. Another thing happening. Notice that the 18-week average just got under the green line. So you're setting yourself up bearish. I'm not in agreement that with traders who want to be bullish this market. I'm looking for opportunities to go short, not opportunities to buy. First challenge of a 200-week average, think about it, it's a 1-year average, and the Bollinger Band should get thrown back, and that's what's happening. Now, you're not embedded here yet. Both numbers are over 80. Last week they were over 80. I don't think they were over it the week before. They were not. So if you had a reversal this week and came back up and kept that, that'd be one thing. Otherwise, you can back and fill between here and that 18-week average. Why not? In the Canadian dollar, I would tell them, if you were next to me, I'd give you that elbow right there. Why aren't you taking some money off the table? You got the higher high, lower and low. You're just moving back and forth in that formation, plus you're overbought. In the yen, a lot of traders have been putting on this carry trade again. I don't see it, okay? you fight the central bank, they're determined to raise rates and cut their balance sheet. But it's been a hard market for traders because it all happened over a month-and-a-half period. Remember, this is a weekly chart. And you've got to get a cleaner package than this to do anything with. I don't see anything I'd want there. Bearish still in Bitcoin. You still have lower highs, lower lows. You could be going to the 55,829. It's just as though as soon as the Ethereum ETFs came out, all the air came out of all this. I'm not convinced it'll stay that way. People like this, but you are caught in no man's land on the chart right now. When we get to Brent versus WTI on a weekly basis, the Brent is moving a bit higher. You can see how you're working here. This is a lot of resistance. So I'm not quite seeing what's going on here. And I'll tell you that, let's assume Russia says they're cutting and they don't cut. Let's assume the same out of Iraq, because both of the countries don't tell the truth. They make a statement one week and they do something different the next week, and who's going to stop them? We already saw that the Saudis once, what was it, 2 years ago or so, fought a battle with Russia and oil prices cratered because of it. You don't want to do that again. But I see the resistance here. I hate this pattern. You've got lower highs, but you have higher lows. You're sort of in no man's land in that. Same thing here, and you see the resistance. It's very clear, 78.08. The 100-week is 78.65, and the 200-week comes right in here at 78.27. So this whole area that I'm pointing to, resistance filled, you're oversold in the market. In the gasoline market, coming down to the bottom here. Now I'm going to switch over, starting with the daily charts next week, to the heating oil. So just to finish this off, I think that you're coming into the point where, you know, short covering is going to take place. You're not embedded there. So you put it together. That's the game plan that I'd be looking at. The last part of the game plan, take advantage of a great 3-month special. You know, 3-4 weeks don't give you enough. 3 months give you a lot that you can see. Gee, he's got something worth that I could use. He threw me an idea. That's what it's about. And everything I do is based on chart action. Special reports are all based on charts. They're video reports. My daily commentaries, they're based on what I back up for you in the videos, because the chart is the story. It's not what I think, it's what the chart is saying. I'm Ira, IraEpstein.com. Remember the cursor up here. I'll catch up with you all next week. Next updates of these will be on Tuesday morning. You have a great Labor Day holiday.